Hey folks, Dan Frio here with your market update for October 2nd, 2024. So mortgage rates ticked up a little bit. These are the top 6 programs people use when they're buying their first house. So I'll do this once a week. These rates aren't my rates. They're not any single bank's rates. What they are is Mortgage News Daily, right up through there. They survey lenders all over the country, and they ask them these 5 questions. The 5 questions are important because otherwise you don't get these rates. So what are they? Well, 3 are pretty simple. These people are buying their first house. It's a single family home, and they're going to live there. Okay, that's those 3. Now, how much are they putting down, and what are their credit scores? Well, let's go over to there and see that. Right through here, it tells us they're putting 75% of a loan, so they're putting down 25%, and they have a 780 credit score. So if that's you, well, that's most likely right in the range of where your rate's going to be. If that's not you, I'm going to give you all my information at the end of this video so you can reach out to me because I'm licensed all over the country as well as Puerto Rico, so there's no reason why you shouldn't use me. So without further ado, let's get to the economic calendar. So here's how my day started. I woke up and I saw the ADP payroll number, and I said, whoa, that's a really good number. How's the market going to react to this? But what you have to put in hindsight as well is all the stuff that's going on right now. So we have private payrolls right now. ADP came in and they said private payrolls were much better than expected. They expected 103,000. Well, they actually expected 124,000. It came in at 143. Now, what you have to put into perspective is ADP's numbers, I'm going to go out on a limb and say they're not all that accurate all the time. They have basically a 50,000 up or down numbers on these. So what I mean is they usually miss by about 50,000 people. So this number could end up getting revised to 99,000 or it could be 200,000. Don't know. And that's the uncertainty that we have right now. But the uncertainties don't stop there. Where do they keep going? Well, we have the private payrolls right here, beat expectations. You have the treasuries going right now because of geopolitical outlooks. So now we have, Russia and Ukraine. Now we have the Middle East. It's a complete mess out there, folks. So that's where the uncertainties are. And now we have the port. Basically, the whole East Coast is shut down. Where will we go from here? I honestly, I'm going to ask for your comments down below. Do you think the Fed's going to ease 25 basis points on all the data that we're seeing right now, or 50 basis points, or not do anything? Okay, so my context is I think they're going to monitor this data. I don't put a lot of credence in ADP, so I'm going to say they're on the 25 basis point cuts because they're still tight. Okay, how do we know they're tight? Well, basically, you're going to see a lot of analysts talk about it. They're going to say, well, is the Fed neutral on rates or whatever? So here's how they figure it out. They say, okay, what's the federal funds rate? And then let's take the inflation rate and subtract it from the federal funds rate. Okay, so right now the federal funds rate is 4.75. We have inflation, let's say it's at 2.5. Some people are saying it's 2.1, 2.7, let's say it's 2.5. Okay, so we have, what is that, 1 3/4 of a shot in cuts that we could have at this point. So that's how much the Fed can reduce rates and still be at a neutral rate. So that's what the markets are talking about when they talk about that. I just did that math in my head. I don't know if it did it right, but you understand what I'm saying. You take the federal funds rate minus out the inflation rate, whatever's left over, that's how much the Fed could cut or would have to raise rates. Okay, so they've already raised them. Now they're on the rate cutting cycle. So give me your feedback down below if you would. Let me know what your thoughts are on those. But let's get over to the broad markets right now are mixed. The Dow Jones was getting hammered this morning. NASDAQ was it was completely red across the board except for oil. Well, we know why, oil. And then crypto's getting a bath too. This was, it's at 61,000 right now. What was it the other day, 65 or 66? Oil's jumping like we thought because Middle East concerns. Let's get over to see how the bond market likes this. So we have the MBS right now down 9. This was down 27 earlier. So the market's digesting this information pretty good. Let's see what Steve Leisman has. He's actually giving us the opening bell in regards to all these numbers. So let's see what he has to say about this. And then when we come back, I'm going to see if the CME FedWatch tool is giving us any different information. Then we'll conclude it because we have a live event we'd love for you guys to attend today. So I'm not going to answer a lot of things right here. I'd love for you to attend our live event this afternoon at 2:30 Central Time. Ask any questions you guys have. It could be about buying your first house, buying your first investment property. How do you refinance? When can you refinance? All these things we'd love to help you with. But without further ado, let's get over to Steve Leisman with the jobs report, and he can actually explain to you how ADP numbers aren't as accurate as a lot of people think. So, Steve, buddy, take it away.
Things have improved markedly in the futures. Welcome back to Squawk Box, now down We were down more than 100 on the Dow, now down about 90 points. NASDAQ indicated down 50 or so. We are going to get data. It's time for the September ADP employment report. Steve Leisman has the numbers. Steve.
Good morning, Joe. Yeah, a little bit better than expected. September ADP up 143,000. Some interesting development on wages I'll get to at the end here. We're looking for 128. Remember, this is just the private sector. The goods sector did well, up 42,000. That's good for the goods sector. Service sector powering ahead, 101,000. Kind of reversing some weakness we've seen the last couple months here. Non-farm payroll estimates for for Friday, 150,000. That's up and around where you would expect it for the business, private sector and the government sector. August ADP revised up by 4,000 to 103,000. Looking at by business size, small business down 8,000. They've had some trouble the last several months. They have been pretty weak, but medium business doing well and large business is up by 86,000. The bulk of the job gains in the medium and the large business. Well, where were the jobs where you'd expect them and where they have been? Leisure and hospitality back again, 34,000. Construction, 26,000. Education and health services, 24. And business and professional services, 20. But natural resources, the mining sector doing well, up 14,000. And here are those wage gains, 4.7%, unchanged for job stayers. But look at the big decline for job changers, 6.6. It had been 7.3. That's the lowest we've seen in quite a bit. Joe, ADP's been running plus or minus about 40,000 on the private sector relative to the private sector numbers from the BLS. So it's in and around where it needs to be. Anything closer under 50,000 is pretty good and is helping. It's about the best you can do, Joe.
All right.
So that's if you go back, and I don't know if I can find this. I found it right on the button. This is wage growth. So we have inflation now at let's say 2.7. So everybody's saying, okay, it's not 2.1, it's not 2.2, it's not 2.5. So let's go all the way to 2.7. So inflation's at 2.7. If our wages are coming in at 4.7, or if you change jobs, you're coming in at 6.6. This number used to be over 7%. Your wages are still outpacing the inflation. Not everybody is getting these kind of raises. So I feel the pain for a lot of people out there. But wages are continuing to grow as well as inflation starting to tick back. So based on all this information, I don't know how much credence to put in the ADP payroll numbers because that's what the Federal Reserve's watching. So now here's what the turmoil is. Okay, is the jobs report going to be strong enough that maybe we don't really have to do much of anything? So we'll do the 0.25% just to keep the markets happy. I think that's what's going to happen. So you're not going to see dramatic swings and changes, but there's a lot of reports to still come. So we'll monitor those. So we go over the CME FedWatch tool. Basically what this is, if you're new to the channel, you're probably not, but if you're new, we use the CME FedWatch. So I've been using this for years. A lot of people jumped on this bandwagon about a year ago, but I've been using this for years. It's usually pretty darn accurate. Okay, sometimes it's not, but in most cases it is. What it is the Chicago Mercantile Exchange puts this together to advise us what's the probability that the Federal Reserve will change the federal funds rate at the next meeting. The federal funds rate is what they change, not mortgage rates, not car loans and everything else. So we go down through here, there's still a 65% chance it's only going to be a 0.25% cut. And then the following meeting is where people are like, we don't know where it's going to go from there. But there's going to be a lot of data coming in by this time. But this is a perfect learning tool. Remember, everybody, I kept telling everybody, don't wait for the September 18th rates from the Fed because rates might not go down that day, and we're seeing that right through here. So mortgage rates are basically, they're up a little bit, a few ticks from when the Federal Reserve cut rates. They didn't drop that 0.5% like a lot of people thought they would. So great learning tool right through there. So my name is Dan Frio. Why I told you at the beginning of the video, if those rates weren't yours, reach out to me. I'm actually licensed in all 50 states as well as Puerto Rico. I work at ServBank. And I'm also one of the country's largest mortgage brokers. Okay, so we're set up with about 50 different companies. What that provides you guys is one application, one credit pool, and we're going to shop your loan over to 50 different companies. Why is that so important? Well, unless you have all day, every day to work on loan applications, because you're going to have to go to this company, put in your applications, and then wait for what they're telling you on the rate that they can offer you. Well, let us do the lion's share for you. So if you're out there looking to buy that first house, please check our grant finder right through there. It's going to offer you some grants. It's basically free money. We handpick those programs. But if you're in need of a mortgage, to buy that first house, buy that first investment property, refinance. We're getting a lot of refinancers right now. Just click the Apply Now button right up through there and you're on your way. Or you can just scroll down to the bottom of the website, right through here, and you're going to get our contact information. There's our 800 number. It's 844-775-5626. Or you can email me directly, and yes, it's me, at dan@therateupdate.com. So thanks so much for watching, guys. God bless. Don't forget to come here at 2:30 Central Time, and we'll be live answering any questions that you have in regards to where are rates going, what's this, what's a good way to refinance, things like that. So we'd love to answer all those questions for you. So we'll see you at 2:30. Otherwise, I'll see you at the closing bell. Have a great day, folks. Bye-bye.